Hi guys, Kim Stallings, Heritage Risk Advisors. How are you doing? Here, super excited to talk to you about our next module. We're going to deal with life insurance. Everybody loves those four-letter words, okay? Death, taxes, insurance, even though insurance is a really big word. So let's go ahead and talk about life insurance. There's a couple of different kinds. I think it's really important if you're an investor or you're an entrepreneur that you understand a couple of things about life insurance. Number one, 4 basic kinds. Burial policies, low end. Term life policies, please don't ever buy them. Whole life policies, of course they're more expensive, but they go with you forever. And then there's IULs or UILs. All those companies want to call it something different, okay? So when we're thinking about life insurance, what are we trying to cover? Again, we're trying to diversify risk. Everybody when they're young says, I'm healthy, I'm never going to die, I don't need life insurance. Wrong, 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 wrong. As young as you are, go out and buy a whole life policy or an IUL or a UIL so your rates can't ever change and lock in those rates. You have to understand that life insurance works off of medical history. And in this day and age, all of our medical records are digital and we're sharing them electronically and everybody's communicating. So every time you go to the hospital, every time you're on a medicine, every time you have a surgery, all that stuff is super visible now. And all those things leave tracers and markers in your blood, in your urine, in your hair. Yes, we're getting graphic. Yes, we're talking about bodily fluids. That is happening. When you go to buy life insurance, you fill out this real big application and you say, hey, here's everything about me. And you turn it in and they say, that's cool. Based on this, if you're not a liar, we're going to go ahead and offer you these certain terms. But then they want to come and check. They want that hair, they want that blood, they want that urine because it's a lot of money for them. And then they're going to find out maybe you got these other things inside your system. They're going to pull your electronic medical records and then they're going to change that pricing. So the younger you are, the healthier you are, the better your rate's going to be for life insurance. And I don't care what kind of policy you're buying, okay? That's important to realize. Other things that are really important when it comes to life insurance. If you're working for a company and you're like, meh, my company has life insurance for me, they take it out of my check, it's one of my benefits, that's cute until you get fired from there or you retire from there or you quit from there and then your life insurance stops. And then where are you? Now you're 10 or 12 years older, you've had a surgery, now you're on some sort of medicine, and now you're out in the marketplace looking for insurance. Buy your own independent life insurance policy. It's going to be the best advice I could ever give you. When you're shopping for policies, like I said, buy a whole life policy, or better yet, if you're a real estate investor, get yourself involved with these IULs or these UILs. Why are they so important? Well, they have a face value. So maybe you have $1 million policy like I do. And then maybe the particular carrier you're with has a 10% face value funding. And you can contribute to that with your 401k, your IRA, random lottery money, or inheritance money that you win, maybe the proceeds from selling a house, and you fulfill that IUL face value. Now you can draw down against that for long-term care, disability, maybe you fell on bad luck, or maybe you want to be your own hard money lender. Hard money lenders don't want me to tell you this, but it's possible for you to act as your own hard money lender and repay that money back. That money can go in and out of an IUL. Some people would call that more of an infinite banking solution, and there's definitely infinite banking solutions out there, and you're welcome to use them, and they are pegged against whole life policies. There's lots of people that can talk to you about some of the intricacies that are involved with that, and offline, I'd be happy to. Or I'd be happy to refer you to somebody if you're not comfortable keeping it all kind of bundled in one place. But realize life insurance policies are a tool. They are a tool for you to leave for next generations. They are a tool for you to fund your own long-term care, your own disability, to deal with yourself if you think or don't think that there's going to be Social Security. If there's uncertainty in your life, don't leave it up to somebody else to fund your life security. Get it taken care of yourself and realize that there's other things you can do with it. In that same vein, when it comes to commercial insurance or maybe syndicated investments in multifamily, passive syndication investments, make sure that your business partners or your asset management team, depending on what we're talking about, have things like key life insurance man policies, key man policies, that they've got things like errors and omissions insurance, that they've got professional liability insurance, that they are protecting that management team, that core group, maybe of surgeons, maybe your deal sponsors in a syndication. Make sure that those individuals are buying the kind of life insurance that will step up to the plate, take care of their heirs and their heirship, and get you functionally out of a deal that you might not otherwise think about. Those are the kinds of things I think about because I'm also a passive investor. I'm also a deal sponsor. And these are the alternatives and the risk transference that somebody like me who's fairly conservative about investing likes to keep in mind. And they all stem around different sorts of life products, different sorts of group risk tolerance and risk deferring products. So hope that makes sense to you guys. Love to discuss it further if you have questions. Again, my name is Kim Stallings at Heritage Risk Advisors. Tune into the next module.